Yeah, so conviction is really important. And how do you get conviction? I think you get conviction because you have a very strong understanding of the business. So if I if I go back to the business in Turkey, for example, basically, that business has a number of different business lines, but the one that has the most value today is they have 12 million square feet of prime warehouse space in Turkey, and it's mostly in Istanbul. And that 12 million square feet has a value today. You could go to a broker, he will tell you that you can sell the whole thing and you will probably get $1 billion for it, something like that, billion two or something. There's only about 100 million or 80 million of debt. So if you just liquidate that entire position, you'll get about maybe $900 million or something. And, so what is a warehouse? So warehouse is land, concrete, steel, some 20% is refrigerated. So you have some refrigerated units and all that. All of these things are going to increase in value if you have inflation. So steel price is going to go up because it's going to track international steel prices. Concrete and cement prices will track international concrete and cement prices. And land also has prime land in a prime, major city in the world has a value. And so when I invested, the value per square foot was about $80 a square foot for land and improvements. And I don't think that $80 is going anywhere. It may be 200 a square foot at some point, but it will not go to 30 a square foot. That won't happen. So I don't care about anything else that's going on. That is the piece that is the most important. It's 99% lease, it's 10 years, inflation index, leases and all of that. So conviction is really important, right? So if you invested in Starbucks, you would have two or three things that you understand. You would understand the unit economics, that when they open a store, they get their money back in 1 or 2 years. You would understand that. If that suddenly changed where it was taking 5 years or 10 years to get your money back when you open a new store, something has changed, right? That's a significant change. If that looks like a secular permanent change, the thesis has changed. But if it continues to be very high returns on capital, the second is you would have had some perspective on the runway, where you say, okay, it has 5,000 stores around the world, for example. It probably has more than that right now, but at 20 years from now, I think it can easily be 25,000 stores, for example. And if you have conviction on that, then the two pieces that really matter is that what are the unit economics and what is the store count, and those are really the pieces that matter. And so when you make an investment in a stock, you should be able to explain the thesis of that investment in 5 or 10 sentences to a 10-year-old without a spreadsheet and without anything. कि भैया ये business का ये value है and this is why this makes sense. And that gives you the conviction. If you have to go look at a spreadsheet or go look at something to then, when price drops 50% to understand what is going on, you have not done your homework. So it needs to get down when you've done all the work to simplicity. It can take a long time to get to those essence of these businesses, but it needs to get to the essence of those businesses. So you have to get to understanding, why is this business resilient? Why will it be around 10 years from now? And why will the economics and the return on equity and all of that still be high? Why will all those things be true? So we aren't particularly concerned with price movements. We are concerned with the expansion or shrinkage of the moat. If the moat goes through a secular decline, we have a problem. The quoted price changing is not relevant.